Okay, more people have joined. Hi everyone. We're just gonna wait, I think about 2 to 3 more minutes to let more people join the session, and then we can quickly get started. Okay, hi everyone. Can you guys hear me? Okay, great. Hi everyone. Welcome back to another session with Vantage. So today we're going to be looking at support and resistance levels. Um, if you guys have any questions throughout the webinar, feel free to pop them into the chat. I'm going to be taking a look at all of them during the course of the webinar. Okay, let's go ahead and get started. Okay, can you guys see my screen? Okay, great. Okay, hi everyone, welcome to today's webinar session. So as I mentioned earlier, today we're going to be talking about support and resistance levels. We're going to be looking at pullbacks, overlaps, and swing highs as well as swing lows. So this will be the first part of our two-part series for our support and resistance series. So throughout the webinar, if you have any questions, feel free to pop them into the chat. And next week, we'll be looking at part 2 of our support and resistance series. Yeah, okay, so I'm Melanie, and let's just get started. So before we get started, as usual, here's a disclaimer. All of the information expressed in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes and do not constitute investment advice and or consultation on how a client should trade. So you should do your own due diligence before investing any of your own money and understand the risk before deciding to trade. Okay, so here's our team. We have Desmond, who is our chief trader as well as CEO of the company Everest Fortune Group, who are finalists for Best FX Research as well as Best Equity Research in the years 2019, 2020, and 2021. Okay, so without further ado, let's just begin. Here's what to expect for today's session. We're going to be looking at swings for support and resistance levels, how to identify significant swing highs and swing lows. We're also going to be looking at how to find accurate starting points. We're going to be looking at pullbacks, overlaps, what they are, how to identify them. And then we're going to be looking at how to combine these pullbacks and overlaps to ensure that you have the most accurate analysis. Lastly, we're going to be looking at combining what we've learned for the pullbacks, overlaps, support, and resistances with our Fibonacci levels. Okay. So let's get started. So firstly, we're going to be looking at how to identify swings. So support and resistance levels in trading refer to prices at which an asset's price tends to stop falling, which is the support, or stop rising, which is resistance. So to identify these levels, you can use technical analysis tools such as trend lines, moving averages, and chart patterns. You can also use Fibonacci levels, which we'll be talking about later on. Additionally, you can also look at previous highs and lows of the asset, as well as volume data to identify potential levels of support and resistance. So this is what we'll be focusing on today. And it's important to note that these levels are not absolute and can change over time. So it's necessary to continue monitoring these levels. Okay. So I've added an image here for you to see how we can use swing highs and lows as resistance as well as support levels. But we'll also go through more in depth in the next few slides. So take note of how they are clear peaks and troughs in the market structure in order to be used as resistance as well as support levels. Okay, so let's first look at an incorrect example. So here's an example of an insignificant swing, which that points to use for Fibonacci starting and ending points, as well as for support and resistance levels. So price, why is it insignificant? Because if you take a look at the drift over here, price movements are too small and there are no significant swing highs or swing lows. So here's another incorrect example. So there aren't really any clear swing highs or lows, and the price movement is small. So here's a correct example with significant swings. So you can see that there is a clear move up as well as down, and with obvious peaks and troughs, and a clear market movement for our price chart. So here's another example. So I've drawn out the peaks and the troughs to point out exactly how clear they should be. Okay, so you can use support and resistance levels as take profit as well as stop loss levels. But you should not use it as an entry if there is no other supporting arguments such as Fibonacci or other graphical levels to support your analysis. Why? Because using a recent swing high or a recent swing low is considered a weak level if it's only the level. So, which is why we'll go through a little bit later on how you can combine support and resistance levels with Fibonacci levels. Okay, so here we have multiple swings. So this is how you identify whether the level that you're choosing is a significant level or not. So if there are at least two swing highs or lows that line up nicely, it's a much better level to use compared to if there is only one swing high or swing low. Which time frame should we use? Yeah, I'm getting into that. Just a few more slides. So you should also try and find areas where these might line up. So you can pull back, you can try and find areas to pull back your support and resistance levels as far back as possible so that you see if there are any areas that line up together. So it doesn't have to be the exact level, as long as it's near an area, that's enough. So you can see on the GIF, we highlight this resistance area. So it's also good practice to see how far the resistance and support line can go. You can see instead of just stopping at the first swing high that's nearest to where current price is on the GIF, we've decided to pull it back as far back as we can go. And you can see we have four significant swing highs that line up nicely together that show you this is a really strong resistance area. Okay, so now let's take a look at starting points. Okay, yeah. So now that we know how to identify significant swings and use them for support and resistance levels, so what are the things that we can look out for when inputting support or resistance level? So firstly, we'll look at starting points. So when picking the starting point of pivot or entry, you want to look at a few rules. Firstly, we want to check if there is a swing high or a swing low, or pullback or overlap level to start from. You want to go back as far as possible, as we mentioned earlier, and intersecting the wicks is preferred. So if you take a look at the image I've included over here, the orange thumbs represent an okay intersection, but not preferred. But it's also not exactly wrong. So preferably, we want to look for intersections only of the wicks, as you can see from the green thumb that we've added. So we'll see more examples in the coming slides as well. Here's another example. We have our first red thumb on our image. So this is what you want to avoid because it's intersecting multiple bodies of candlesticks at the very first swing high. So instead, you want to maybe start from the second swing high with the first green thumb. So this is also what we consider a clean cut. So you have levels that are only cutting the wicks or only cutting maybe like one body of a candlestick, as you can see from the intersection. Okay, here's another example. You can take note of the red highlighted area. We want to avoid intersecting so many candlesticks. As I mentioned earlier, we want a clean cut. You can also take note of the three green thumbs. So you want to find the swing highs that line up nicely with one another, something like what we have in this image here. Okay, so now let's take a look at the pullback and the overlap. Okay. So so sorry about that. Here we have an example of a pullback support. So pullback support is a strong level of support. It's a breakout from a previous resistance level, and price is now dropping back to visit it again. So a pro tip, when a pullback support lines up with a Fibonacci level, it is very powerful. So here, if we take a look at the GIF, we have a pullback support. Here we can take a look at the shape first. Here we have a pullback support, and we are expecting price to go back, to reverse off and go back to this level of support. And when making use of Fibonacci levels, here you can see there's a 38.2% as well as 61.8%. And we are expecting price to go back to this area of confluence. And you can see it bounced off nicely off of that area. So pullback resistance works well when it breaks a significant swing low. as you can see from the example, and then starts pulling back to it. So it's as you can see, it's even better when there are multiple Fibonacci levels that line up with it. Okay. So here's another example. At the red area, price tested this level 3 times before, with multiple swing highs in line with one another at the resistance level. That's represented by the red highlighted area. So once price breaks the red area, it becomes a pullback support. And we expect price to pull back or retrace this level, as we can see from the dotted arrows. So here's another example. Here we can see price has tested this green highlighted area 3 times before. It's now broken this level, and we are expecting it to rise again after the swing low. It's represented by the movement is represented by our red dotted arrows. Okay, here's another example. We have a significant swing low highlighted by our circle, and thus a possible support level. So as price now passing the swing low support, it's now a pullback resistance. So now let's see if price pulls back to the resistance level. You can see after that, it did pull back to this same level over here. Okay, here. You can see from the red arrow, price has reached the pullback resistance. So once it reaches and reverses off of the pullback resistance, it will be an overlap resistance level. So the next thing we're going to be looking at is overlap resistance as well as support. Is it possible to get the slides as a PDF? I'm actually not sure. I think perhaps you could screenshot the slides if you want, or you could email Vantage. I think the email is on their website. You could email them regarding this because I'm not entirely sure. I'm so sorry about that. Okay. So now let's take a look at overlap support and resistance. So overlap resistance occurs when price reacts off a particular level from the top and from the bottom. So the more times it reacts off this area, the stronger the overlap area. So this means that there are bulls and bears that respect this area. So it's an important point to take note of. So pro tip, if the overlap area lines up with other elements such as Fibonacci or graphical elements, it will make it even stronger. So you can take a look at this GIF that I've included here. You can see price broke through this level. So it's at our swing low support. Once price breaks through this, it becomes a pullback resistance. And then now we expect it to retrace, which is what it did. So it retraced once and retraced twice, making it an overlap resistance. Okay, if you are a little bit confused, we have a lot of examples that we can look at. Okay. So here, in the image, you can see a swing low support becomes a pullback resistance once price breaks the support at the 105.643 level. So we're expecting price to pull back or retrace to the same level. Now you can see in the GIF, that's exactly what price did. You can see how price retraced or pulled back to this resistance level and reversed off of it, making it now an overlap resistance. Okay. So now let's combine both the pullback and overlap levels. So here we have a big swing high resistance level. Price surpasses this level and becomes a pullback support, where we expect price to pull back or retrace to this level. So in the green areas, we see price retrace this level and bounce off of it perfectly. Once price bounces off that support level, we call it an overlap support. Okay, if you guys have any questions, feel free to pop them into the chat. Okay, but here's another example. So here we have two swing highs lining up. We have a swing high resistance. Once price has surpassed this level, so it broke our resistance level, we now call it a pullback support because we are expecting price to retrace or pull back to this level, the 0.68745 level. Okay, so since we expect price to pull back, you can take note of the two circles. So this is exactly what happened. Price bounces off this level twice, making it a strong overlap support. Because you can see how there are multiple swing highs as well as swing lows testing this level. Okay. Here's another example. So over here we have multiple swing low supports, as you can see from the two circles here. Once price breaks through this level of support, it's now called a pullback resistance because we are expecting price to pull back to this level. So once price pulls back to this level, it's now a overlap resistance. And you can see price reversed off of this level 3 times, right? And then broke through again, now making it a pullback support. And then once it touches this again, this same level, it's now an overlap support. So you can see how significant this specific level is because price is constantly testing this 33420 level. Okay, so now let's take a look at some current examples. Let me just stop sharing and go to my trading view. Here we'll also be talking about time frames. I think I had a question just now regarding time frame, yeah. So we're gonna be looking at that as well. Okay, let me just pull up my trading view. Okay, we'll also look at how to combine Fibonacci levels as well. Okay, let's take a look at Aussie dollar. Sorry, it's taking a while to download. Okay. Okay, let me just share my screen. Okay, so let's take a look at Aussie dollar, which is what we have here. So we're gonna start off by identifying the trend. So I'm on a 4-hour chart. Okay, let's start by looking at the trends. So we can see on a monthly time frame, this is what our price chart looks like. Weekly time frame, we can see prices have been dropping. If we look at daily, prices are kind of trending over here. So we typically like to analyze on either the hourly or the 4-hour time frame, but it's important to take a look at the longer time frames as well, so that we get a general sense of where prices are heading. We typically stay away from the 1 minute to 30-minute time frames because there tends to be more noise on those time frames. Okay, so this is the 4-hour chart. Now let's take a look at 1 hour. Okay, so you can see prices have been dropping. So let's do our analysis on the 4-hour chart. So previously we had a question on which time frame to use. So we like to alternate between 1 hour, 4 hour, as well as daily. With regards to looking for swing highs and swing lows, if the chart that you've chosen, for example, okay, these are pretty okay, but for example, if you are looking for starting points, you want to choose a chart that has significant market structure. So something like this, with very significant swing highs as well as swing lows. Because as we mentioned from the slides, we want significant swing highs and lows. You don't want something that is okay, I guess something like this area here, something that is kind of, no significant swing highs or lows. Yeah. So you can alternate between the hourly, 4-hourly, or daily to see which market structure is the clearest. Okay. So now let's go ahead and begin. So we have a general downward trend on our chart over here. Right, we want to now that we've identified the general trend of the chart, let's identify support and resistance levels. So, okay, I can see over here there is a pretty significant level here. Why? Because if you take a look here, price has this is one significant swing high, two swing highs, and then we can see price broke through this level. Okay, let me just label it. So we have a swing high resistance. So we have a swing high resistance here. Once price passes through this area, right? Once it passes here, we now call this a pullback support. Why? Because we are expecting price to go back down and retrace this same level. So before it retraces this level, it is a pullback support over here. At this point, it's a pullback support. I'm going to play it. Once it reaches here, and we see that it has overlapped Okay, here you can see that price has tested this level a few times. Now it is a overlap support. Okay, I hope that makes sense. But basically, we're just expecting price to bounce off of this level and um, retrace it. So here we can see price tested this level once again. Okay. Okay. So you see here, once price breaks through this level here, now it is a pullback resistance. Why? Because we're expecting price to pull back and bounce off of this level or continue to test this level. Okay, let me just check the chats to see if there are any questions. Okay, no. So that's how you identify pullback and overlap support and resistance levels. So you can see how these levels are quite important because it shows you where price may reverse off of, or price can continue to test these levels later on. Okay. Okay, now let's take a look at another chart. Actually, with regards to time frame, let me show you an example of what to look out for. Okay. Okay, I've got it. Let me just share screen. Okay. So here's an example of a clear market structure, like I mentioned earlier. So this is what you want to look out for before starting your analysis. Here's an example of an unclear market structure. Okay, so this is just to show you how we can adjust timeframes for a clearer market structure. So over here we can see it's a pretty messy market structure, and this is on the M15 view. Now if we take a look at the 1 hour view, as we mentioned earlier, we want to stay away from 15 minutes typically because there is so much noise. So there tends to be a little bit it tends to be more unclear on the 15-minute time frame compared to the hourly or 4 hours. So if you look here on our hourly time frame for the same chart, this is a much clearer market structure, and we can see price movements more clearly. Okay. Okay, let me just go back to my trading view. So let's take a look at another example. And then we can practice identifying support and resistance, pullback and overlaps together. Okay, so here I have dollar yen. Okay, now let's take a look at monthly. You can see there is a pretty clear market structure here. Weekly. So this is these kind of price movements are what you want to avoid before you start analyzing your charts. So we take a look at daily. Okay, falls and hourly. So I'm gonna go ahead and start analyzing the hourly time frame. So we can see prices were increasing over here, but we've noticed a sharp drop from here. So now let's identify our support and resistance levels. So if we start from, okay, for example, this level, right? So we have a okay here. So we have a swing low over here. Can someone tell me in the chat, what do you guys think about this support level? Do you guys think this support level is valid? Okay, so even though we have a swing low over here, which makes it a swing low support, but because it cuts so many candlesticks over here, and it cuts the bodies of the candlesticks. So this is not a clean cut, so we wouldn't consider this a valid support level. If we take a look at this one over here, or this area in general, would this be considered a valid support level? Can let me know in the chat what you guys think. Yeah, okay, so this would be considered a valid support level, and it's also a pretty significant level since we have 1, 2, and 3 swing lows over here. Now, if we look over here, price past this support level, now making it a pullback resistance level. Why? Because we are expecting it to rise back up to this level. So before that, let me label this. This is a multiple swing low support. Okay, so it's a swing low support, Once it passes through this level, we're expecting it to pull back to it, thus making it a pullback resistance level. You can see prices are starting to climb up towards this level. So once it touches this level, then it will be considered an overlap resistance level. Okay, so now let's make use of some Fibonacci levels. So same thing for Fibonacci, you want to make sure that you find clear market structure as well. So for a retracement, which is what I'm looking for now, we typically use these five levels. So I can see here that I can see now my 61.8% lines up nicely with my support level. So I'm going to remove the rest so that it's clearer. Okay, so basically we want to find levels that correspond or that line up nicely with your support and resistance levels. So this is to get confluence, or rather get confirmation that price is likely to approach that area. Let me see if we have any other levels. Right, so for Fibonacci projection, which is what I'm looking for here, we use these three levels, 61.8, 78.6, as well as 100%. Here I can see my 78.6 lines up nicely with the 61.8 as well as my support level or resistance level. So I'm going to remove the rest. And here. So now we're expecting price to go up here to this level and reverse off of it. Okay. Are there any questions? Let me check. Okay, no questions. So that's basically how you make use of Fibonacci levels in order to find a confluence level. So another way of getting confluence is by using indicators. So in this case, we like to use Ichimoku as well as MACD because these give us at one glance, you can see exactly whether it gives you a bullish or a bearish signal. So if I take a look at Ichimoku first, let's see prices are moving below the cloud. So it actually gives us a bearish signal. But if we take a look at MACD, you can see this green area over here is giving us a bullish signal. So you see that because there are so many indicators out there, 50% of them will give you a bullish signal and then the other 50 will give you a bearish signal. So it's important to make use of the different kinds of indicators as well as graphical, which means like trend lines, trend channels, your support and resistance levels, as well as Fibonacci levels in order to get confluence. So now I'm going to pull up RSI. So on our RSI, let me just highlight this level. If you guys were here last week, we talked about stochastics and RSI indicators. So if you weren't here, I'm just going to show you really briefly how we make use of that. So here we have a divergence on our RSI and on our price chart. So here you can see prices have made a lower low, whereas on our RSI, we see prices making a higher low. So this is what we call a bullish divergence, which also gives us a bullish signal because we are expecting prices to continue to rise after this divergence. Okay. So I'm going to remove Ichimoku because it doesn't line up with our bullish bias. Let's use stochastic. Okay, similarly on stochastic, we see that prices have made a higher low. Yeah, over here. So it's quite a small difference, but it did make a higher low over here. So we have 3 out of the 4 indicators that we've used that support our bullish bias. So that is, so we've gained confluence that prices will continue in a bullish momentum. Okay. So it's important for you to decide which indicators you like to use, be it Bollinger Bands, any of the indicators that I've mentioned, but also to use them together with graphical analysis like your resistance and support levels. Okay. Okay, let's just do one more chart together. Okay, let's do US 100. So on my hourly time frame, I have pretty clear market structure. I have very clear peaks as well as troughs, so it's good to start on a graph like this. Okay. Now let's identify some support and resistance levels. So here, for example, could be a valid multiple swing high resistance. Here could be a valid swing low support level. And actually, if we pull it back further, that's why it's always important to pull back as far as you can. This is now an overlap level. Okay. So if we take a look here now, we can see there are multiple swing highs here, making it a swing high resistance. Okay. And now we are expecting price. Okay, let's see. Okay, here we see price has passed through this level here. And we are expecting price to pull back to the same 121.35 level. So now it's a pullback support. Okay. If we press play, we see how it goes. So we see it retrace. And it actually retraced it for quite a while, as you can see over here. So at this retrace level, this is a overlap support. And then it pulled back again, making it a pullback resistance. Of course, in this case, we have the benefit of hindsight, but typically when you find a level that has pulled back once, it will normally come together with an overlap support and you can expect it to bounce off or reverse off of that level. Okay. So that's how you identify support and resistance levels. Let me check to see if you have any questions. Okay, it doesn't seem like it. Okay, that's all I have for you guys today. If you guys have any other questions, feel free to pop them into the chat. If not, next week we will be going through the second part of our support and resistance series. So next week we'll be looking at trend lines, trend channels, all of that, and we'll be looking at how to combine it together with resistance and support levels. Thanks, Fergus. That's good to know. Hope you guys learned something from today. I hope it wasn't too confusing. Yeah. Thank you guys so much. See you guys next week. Bye.